That's the first and foremost thing that we work hard to do, is make sure that our audience is educated and make sure they're the smartest when making buying decisions. These are provided through the state of Texas, and there are some city programs, but they're the big ones that provide the most money are through the state of Texas. And these programs will provide you money to cover your down payment, and in some cases, your closing cost. So I'm the number one down payment assistance loan officer in the state of Texas. That means I've just done the most loans in the state of Texas last year, right? That's what the award is they gave me, right? And we just do a lot of these because it makes a lot of sense for people, because the cash is king. Why use all of your cash to buy a house? Why not keep a lot of it liquid? Because when you buy a home, you're going to have expenses. You're going to want to furnish the house. You're going to want to do different things, right, with it. And so let's go get money. Now, there are different types of grants. There's grants that are through what's called TDHCA. There's grants that are through what's called TSHAC, and there's Seth 5-star and there's Seth Gold Star. Each one of them are different. Some of them ask you to repay the money. Some of them don't ask you to repay the money. Some of them will say, hey, if you sell it in a couple of years, repay it, but if you hold it for at least 5 years, you don't have to repay it. And so there's a strategy, and that's the important part of understanding your why to buy it, and one of the most important questions: how long do you plan on keeping the home? Because the answer to that question helps me set up a strategy, the right type of loan program, so I can make a recommendation. Because if you said only 3 years, I want to make sure you understand if you're wanting one of those grants, and the only grant that makes the most sense for you is the one that says if you sell it before 5, you're going to have to pay it back, or pay at least 2 years of it back because it's forgivable every year up to 5 years, that you just understand that and how that works, right? And so it's a really important question that we ultimately get to in our conversation. Yes, ma'am. We have to go through an approval process. We have to be vetted on a regular basis to make sure that we are qualified to be able to offer the product and program that's being offered through the state of Texas. But I'll tell you, we also make less on those loans. So a lot of it, and it's unfortunate because they're making decisions based on a financial and transactional basis decision, and saying, I don't want to offer that product because I'm not going to make as much money on that client. That is fundamentally an issue, because we shouldn't be looking at it as a transaction. We should be looking at it as a lifetime value of offering the product to that client. Because some of my best referral partners and my best clients that refer me the most are the ones that I put on that product, because they're so thankful, because they've been told no 2 or 3 other times because people didn't offer the product. Okay.
Based on income, the grants?
So, great question. Yes, sir. So they're going to have different income limits for each one of them, but you could say about $88,000, between $82,000 and $88,000, depending on which product we go with, is going to be the income limit for that grant program. Now, if one of you makes 80 and one of you makes 50, but you only need the 80,000 to qualify, then I'll leave the 50,000 off. That way you qualify based on income limit. I don't need to worry about the other one, the $50,000. I just won't put that on the loan, and I'll just qualify you on the $80,000 income. And so there's different ways to look and think about it. So, but the max is going to be like that call it $82,000. Okay, but they do cover, and we'll get into some other things, but they do cover your down payment, and they can even cover all your closing costs. So for your veteran, in your VA loans, you have no down payment, 0. You can take out a grant, cover the closing cost, and you've actually bought a home for nothing. Got your earnest money back. That's what happens in 99.9% of all VA loans that we do on those grant programs. They get their earnest money back. They bought a house for free. I had a teacher with $200,000 in the bank. We did a grant program for that individual. She had the money. She was looking to put 20% down and get the lowest rate. We opted for the grant program that came with a little bit higher interest rate, but it covered all of her down payment and closing costs. And it was because I asked her that question, how long do you plan on keeping the house? And she said 18 months, and then we're getting relocated. I'm like, why would you want to take all your money out of that account, get taxed on that money because you're not available at that age to be able to pull it out without taxes, to pay the taxes on that money, to put 20% down, to only live in the house for 18 months? Why don't you just buy it for free, because you didn't have to pay the grant back, sell it, and keep your money working for you. And so there's a strategy behind these types of conversations that we'd have, whether we're recommending one product over a completely different one.